Welcome to today's market breakdown. We're diving into PACS Group, ticker symbol PACS, a healthcare services provider that's been making waves on the NYSE. After a prolonged period of regulatory uncertainty, PACS is emerging into a momentum-rich breakout zone. With strong Q3 fundamentals, improving sentiment, and technical confirmation across multiple timeframes, this name is shaping up as a potential reversal candidate, both in the short term and over the long haul. Let's start with the fundamentals. PACS posted a solid third quarter, raking in $5.14 billion in revenue and $169 million in net income. That translates to earnings per share of 1.04 and a forward price-to-earnings ratio of 15.11, well below the sector average. That's a setup for potential multiple expansion. On top of that, the company is now current with its SEC filings, removing a major overhang that had been weighing on the stock. And while analysts are still catching up, with a consensus price target of just 26.75, PACS closed at 27.50 and continued climbing after hours. That kind of divergence between analyst sentiment and market action often signals a re-rating cycle in progress. Now let's zoom in on the daily chart. The Money Flow Index, or MFI, is flashing a short-term reversal signal. With MFI at 81.04, PACS is firmly in overbought territory. Historically, that's where we see short-term pullbacks, or at least some consolidation. Volume surged to over 65,000 shares, confirming aggressive buying, but also hinting at potential exhaustion if that pace doesn't hold. The stock is trading well above its volume-weighted average price, or VWAP, which sits at 26.16. That kind of extension often precedes a mean reversion move. If MFI stays elevated while price stalls or forms a bearish divergence, we could see a pullback toward the 26.50 to 27.00 zone before any continuation. For tactical traders, that's a dip buy opportunity or a short-term mean reversion setup worth watching. Options flow is also telling a story. December 2025 calls at the 30 strike are seeing strong open interest and volume, signaling bullish sentiment. Meanwhile, the $25 put position is down over 28%, suggesting bearish bets are being unwound. Implied volatility remains elevated across the board, reinforcing the idea that a directional move is brewing. And right now, the bulls are in control. Looking at the bigger picture, PACS has a market cap of $4.31 billion and 156.62 million shares outstanding. It's trading near the top of its 52-week range, which spans from 7.50 to 27.78. If the stock reclaims its prior valuation highs, some of which were forecasted as high as 42.94, that's a potential upside of 175% from current levels. But let's not ignore the risks. Healthcare names like PACS are always sensitive to policy changes, especially around reimbursement. The company will need to maintain consistent earnings growth to justify further upside. And in the short term, that elevated MFI and price extension above VWAP could trigger a pullback before any sustained rally. Bottom line, PACS is showing signs of a multi-time frame reversal. The fundamentals are strong, sentiment is improving, and the technicals are aligning. But in the near term, traders should be on the lookout for signs of exhaustion. Watch for RSI divergence, VWAP retests, and shifts in options flow to time your entries. And hey, before we wrap, feel free to check out our sponsored snack section below. Whether you're charting breakouts or riding reversals, a good munch goes a long way. Thanks for tuning in. Stay sharp, stay tactical, and we'll catch you on the next one.